everyone. Welcome to the virtual press conference of Federal Bank Q1 FY24 results. From the bank, we have MD and CEO Mr. Shyam Srinivasan, Executive Director Ms. Shalini Warrior, Executive Director Mr. Harsh Dugar, CFO Venkatraman Venkateshwar. The conference will begin with the addressal by the management, followed by a Q&A session. I would request participants to be on mute during the speech. Now I would request Shyam sir to address the media. Over to you, sir.
Thanks, Devashri. Good afternoon, everybody, and welcome to first of FY24. Our results were published maybe an hour or two ago. You may have had a chance to see it. Let me just give you some of the salient points, and then we'll, as usual, have questions and answers. Firstly, I think the key message and the important message I want to share is that FY24, unlike many past years, has been a strong start. What is seasonally a slow quarter saw very encouraging business growth, both on the credit and on the liability side. We saw pickup of almost sequentially 5%, both credit and liabilities growing quite smartly for us. And even more encouraging, this was quite broad-based. There was no one business that hogged it. We had considerable progress across all our businesses, almost all of them registering 4 to 5% sequential growth. So that augurs well for the financial year, which means the platform is strong and the growth is quite consistent. And on the back of that good growth, we had some strong outcomes on financials. Our return ratios continue to track well, ROE of nearly 16% and ROA of 1.3%. Profit growth, as you may have observed, is about 42% growth Y on Y. So these were the sort of financial highlights, but as always, it's just not the financials, it's the various underlying developments that are important to keep this going sustained. When we met at the end of FY23 results, we did say, given the way the markets, the repo rate increases were there from May 22 to March 23, and that rate transmission was happening in a credit pricing was instant and the liability pricing had a lag. We did visualize that between Q4 last year and Q1 this year, there would be some compression in margin, and then we would see that pick up quite as the year plays out. I'm happy that almost all our models that we had visualized are coming through. In fact, we may see some pickup faster than we visualized. So that's the encouraging part. We expect from Q2 onwards, the margin pickup, the reversal we saw, the trend come back quite meaningfully, maybe 5-7 basis points improvement even in Q2. Credit quality, which has been a core strength of the bank, continues to be strong. We had said our credit cost will be on and around 40 basis points, which clearly is amongst the best in class. We are at 40 basis points in Q1, and there is no significant deterioration in any portfolio, except the fact that those accounts which had been restructured during COVID and the moratorium period was over in March 23 saw some elevated slippage, but that was expected and it was in our planned run rates when we guided for a 40 basis point credit cost for FY24. So in summary, Q1 has seen a fairly strong start. Net profit, last quarter was an exceptionally good one, 903 crores profit. Otherwise, back that out, this is the best profit quarter we've had at 854. Return ratio is quite strong and intact. And our growth has been quite broad-based across the different businesses. So with that commentary, let me just open it up for questions and answers. Shalini, Harsh, Venkat, all are there. So we'll be happy to take questions.
Thank you, sir. Now the floor is open for Q&A session. Request participants to unmute themselves and announce their names before asking the questions. And you can also write your question in chat box. So I guess Saloni raised her hand first, so I will start with her and then rest confirm.
Hi, sir. Very good afternoon. Saloni from Economic Times.
Good afternoon.
Sir, just wanted to get your sense. Q1 actually even last year was, surprisingly very good, as you mentioned in your opening remarks that, it's a seasonally slow quarter. But going forward, we are seeing a lot of analyst commentary come out on a possible NIM slowdown and even credit growth slowing down. So are there any sectors which, already are showing any stress indicating towards all those things? Can you give some color on credit growth going forward and, NIMs and deposit as well? So we were anticipating that banks would go on and hike deposit rates, but because of the 2000 withdrawal, they didn't need to do all those things. So will the current liquidity be enough to fund whatever comes in the future? Thank you.
Okay, it's a lot of questions. I'll try to give you my responses. Firstly, Saloni, the Q1 last year was good. If that was good, this is better, as in the incremental growth. And that therein lies also some part of the answer to your question. When there is considerable credit expansion on a sustained basis, which means generally creating economic activity, and that creates deposits. So credit creates deposits, and it's a very happy and virtuous cycle as long as the right things are happening. And I do believe we are in one such cycle. Will there be some challenges? There may be some, but I don't believe it will be anything pronounced at this juncture. All indications are that certainly the Indian trajectory, domestic consumption, all look quite encouragingly in the right place. Having said that, always it's wise to keep a close watch and ensure that nothing is going off rail. So I'm not flagging any particular slowdown or stress at this point in time. Also, for a bank like us, which has kept our risk profile quite consistent for long periods of time, and we don't want to take undue risk. Within that, our ability to grow in many geographies. That's why I made a point to mention that our growth has been broad-based, both geographically, segmentally, and product-wise. So it's not like some one area and one product has grown exceptionally. So it's been kind of broad-based. So I think for us, if India grows, my view is India's credit growth for FY24 will be in the teens, whether it's 13 or 14 or whatever, there will be credit expansion of that order of magnitude for FY24. And if India were to grow, the whole system were to grow at that pace, I do believe we can grow at 18-19% because we've been steadily gaining share, and our reach and distribution and our momentum is quite favorable. So growth possible, India story of credit growth possible. Credit expands, usually deposits follow. So I do think, in my mind, the incremental deposit rate battle, if you will, may not be as intense. There will be, of course, a sort of scramble for deposits. That will always be at this credit expansion, but I don't see it very different from what it was, and to that extent, I don't expect any pricing challenge of a scale in the periods ahead. I know Harsh or Shalini, if you want to add, please go ahead.
I think you've covered it, Shyam. So you've covered all the ones that Saloni had asked for also.
Okay.
I just have one more last question for Shalini, ma'am. Ma'am, we've seen a lot of regulatory changes on the fintech side. Maybe now it will ease off a little bit. Maybe RBI has done more than enough on that space. Considering that, you're one of the premier banks helping fintech tie-ups and, they using your channel to come and offer products. Going forward, are you tweaking any partnerships in line with, whatever the regulator has brought in? Are there any issues that are still pending? If you could just give some sort of color on that.
Thanks, Saloni. First of all, very clearly from day one, we've followed a very disciplined approach to onboarding of fintechs. We go through a very rigorous process of assessment from a regulatory perspective, legal perspective, commercial perspective, and a whole host of other things. Insofar as regulations are concerned, Saloni, there were two main directions that came from Reserve Bank of India. April of 2022, co-branded cards, both debit and credit cards. and July, August, September timeframe, the digital lending guidelines for personal loans. In both instances, we had, we've structured ourselves both from a technology perspective, contractual perspective, customer experience perspective to meet the regulations, and we are compliant with both the sets of regulations. Insofar as regular savings bank accounts are concerned, like the partnership we have with an Epify or a Jupiter, currently the regulations that govern it are typically the business correspondent regulations, the outsourcing regulations, and we've made sure from day one we've complied with it. So the broad point is that the only really restructuring we did was on the credit card piece after the April 22 circular. Everything else, ab initio, we've made sure we've complied with it. In the future, if some regulations come out, potentially there could be something that comes out, for example, on savings accounts, we will ensure that we comply with it. So our pace of growth and tie-ups with partnerships continues, goes through a very rigorous assessment process before we onboard them, Saloni.
Okay, thank you so much, ma'am. Thank you, sir.
Welcome, Saloni.
Thank you, ma'am. Piyush, would you like to go next?
Yeah. Sir, just wanted to actually recheck on the figure that you gave. You're saying 17-18% the advances will rise this year.
Yes, that's what I said. High teens, yes.
So what is the NIM target for this year?
In the beginning of FY24, we had said we expect 330 or so. We're still holding on to it.
Okay. So will you be looking to raise capital anytime soon? There were a couple of reports earlier.
Piyush, you will be the first to hear it when we are ready for it. Yeah, we did mention at the beginning of FY24 that we are looking at a capital raise in the course of financial year 24. We are working through it, but I can't quite comment on when and how much, but we are in the process of working through it.
Okay, so finally on FedFina, there were a couple of reports saying the bank has stopped looking for stake sale. Is that true? And what is the update on the stake sale process which is going on at the
I also read the same report. I don't have anything comment to offer other than the fact that we have a resolution by the board that we will remain majority investor as long as the regulations permit. Yes, we will continue to be there.
So finally, on personal loan, is there any sort of, cautious approach that the bank is taking, or the bank is comfortable with its personal loan segment growth?
See, our personal loan book, as you may have observed, firstly, all our unsecured product is fairly small as a component of our overall credit book. These are businesses that we traditionally do on a pre-approved or pre-qualified on our existing base or a pre-qualified database. Right now, the quality is holding quite well. Like any other credit book, we constantly watch to make sure that there are any signs of stress. We also have caps on which business, how much we would like to do. I'm not flagging anything as a risk at this point in time.
Thanks, I'll come back.
Thank you.
Thank you, Piyush. Jinit, would you like to go next?
Yes, thanks. Hi, good evening. Sir, I wanted to understand from your bank's perspective as to how do you look at lending to startups? Because if I'm not wrong, in Feb or March of this year, you partnered with a state government startup initiative. So wanted to understand as to how do you see at lending to startups, and if there are any challenges that you look at? How do you look at it, and what is your approach?
I think your question has two parts. One is lending to startups and lending with startups. We are more focused on working with startups to do lending. Startups or fintechs, right? That's what you may have seen when you saw the state government. That is actually not even at the startup, that's the RBI Innovation Hub, where Federal Bank and the RBI Innovation Hub work together to bring Kisan credit card loans, instant KCC. So that's a program that we work with the Innovation Hub of RBI, and it's literally, as the name suggests, instant credit to Kisan, to farmers. And that's a program, and likewise, we are working on a few more programs with different bodies to ensure that the last mile digital capability is building consistently. Do we lend to startups entirely based on the business model and the flows and the ability to, for them to stay stay in the business and for us to recover should something go wrong. So I don't have any go or no go. It's a principled decision based on what the business model is and what our comfort with the promoters and what is the second and third line of recovery capabilities that are there should something go wrong.
No, thanks.
Thank you, Janit. Vishwanath, would you like to go next?
Hi, thanks, Abhishek. I hope my audio is clear.
Yes.
Shamsar, the question I had was with regard to the NPA number. Now, in your commentary, you said that some of the restructured accounts, it was, even though that was a part of the planned number, but some of them slipped into NPA during the quarter. I just want to know how much of that would be, how much of the actual slippages are from the restructured book, and outside of that, what are the slippages like? And I'll come back with the next question.
No, our overall slippage for the quarter was about 490 odd crores, out of which 250 or so is from retail, out of which about a third are from the restructured portfolio, which is pretty much what our outlook was for Q1 of FY24. So it's not been any out of pattern. A normal quarter, our slippages is between 400 and 450 crores. This quarter was about 10% more on the back of this. But you must keep in mind the denominator has grown quite strongly over the last 2 years, right? The book has moved up also.
That's also part of my question, because since the denominator has grown and the ratio has actually gone up by about 2 bips. So I'm just curious to understand the trajectory that we're expecting. Is this sort of a one-time bump, or you'll continue to then reduce it?
No, I think, Vishnath, the way to see it is we're saying our credit cost will be in and around 40 basis points, which is what it was this quarter. And we think the full year also will be thereabouts. And we don't think we will, if anything, we'll only keep strengthening our coverage. So by that logic, slippage should also be trending at about 1% of our portfolio. That's been our run rate.
Okay. The other question was with regard to the unsecured portfolio. I know you said that you're not flagging off any risk, but just today, TransUnion CIBIL has put out its sort of a sector-wide report where they're saying that credit card NPAs are up about 66 basis points year on year between March 22 and March 23. And what we are also seeing is that a lot of banks are complaining about the fact that there are fewer revolvers and more transactors, which is making the product a little less viable for banks, and they are therefore cutting down on some of the benefits they're pushing with the cards. We've seen one large private bank already do that. I'm trying to understand what your approach towards credit card is going to be for FY24.
Because for the fact that we are relatively smaller in that business, our total outstanding in cards is about 2,000 crores. And out of the 2 trillion, right? That's the current outstanding on credit cards. So as you can see, we are at about 1%. So we see the opportunity for us to grow in that business is still quite intact. Because of the fact that we don't have any either baggage and or issues to resolve, ours is a clean run for growth. But within the same framework that we've always kept, right? We don't want to be very courageous about doing unsecured and then run into a problem. So as long as the risk appetite is in control, we can grow. Because the base is small, we do expect reasonable growth over the next 3 to 4 years in this business. But I don't want to be a situation where credit becomes a problem. So we'll keep guarded on that. Growth is an option. Go ahead.
No, I said that in a market where the average growth is 25-30%, what is reasonable for Federal?
See, when we are at 2,000 crores, if we grow 500 crores, it's already 25% growth, right? So we expect it can even grow 40%, 45%. But in an absolute sense, it'll be 800 crores to 1,000 crores. Our credit book is now 185,000 crores.
Got it. Okay, thank you.
Thank you, sir. Thank you, Vishwanath. Actually, I have a question on the chat box from Business Line Balachandar, sir. The question is, CV segment ended on a weak note in Q1 due to pre-buying. How did your CV portfolio perform in Q1? And do you expect Q2 to be better? And what are the key growth factors in the coming quarters?
Maybe Harsh can answer that on CV. Harsh?
Hi. Harsh, am I audible and clear?
Yeah.
On the commercial vehicle side, one, we definitely have seen a reasonably good growth. Part of the fact is that we have been late entrants over here. Base is small, so we do see that. We have, by virtue of a couple of things, increased the distribution reach through our branches. We have increased our coverage to cover north and east, which was not done earlier. And we are seeing a fairly robust demand coming in because industry growth in general, we see a reasonable pickup over there. Q3, Q4 typically are the ones which are more robust because of festive season kicking in. So overall for this financial year, we see a good growth coming both for the industry as well as for the bank.
Thank you, sir. His question is, what are the key growth factors coming in the coming quarters? If you would like to answer that.
So,
what are the
I'm
key
sorry,
growth factors in the
can you
coming
repeat that
quarters?
again, please?
What will aid growth? What will aid growth?
What will aid growth? One, for us as a bank, one is the distribution, which we, like I just mentioned, is branch distribution through other verticals and our reach and our partners. That's one. Externally, we are seeing reasonably good growth coming in because whenever there's a growth in the economy, the GDP growth, logistics is one segment which has to keep pace with that. So even from an external demand perspective also, we see growth coming in. So between external factors and the fact that we are focusing on this business, this remains as one of the key business areas for us. We are quite confident of our growth rates being there. We are looking at obviously a smaller base, but we have grown about 70% odd, and we're looking to grow at that level for the next couple of quarters for sure.
Thank you, sir. I would like to ask Siddhi to ask the next question.
Hi, sir. Siddhi here from Reuters. Just wanted a follow-up question on your capital raising plans. You said you're currently evaluating the quantum, right? Any quantum you have?
No. I said we are evaluating many things, but quantum at this point in time, what we have on hand is a shareholder approval to go up to 4,000 crores in the form of QIP and or a preference. And therefore, that is what is our permissible limit. Now, we'll certainly work through it. I can't comment how much and how soon, but yes, we are working through it. Okay. So one more question. I know you've answered it, but I lost you in the middle. I just wanted to speak to you about this Fed FINA. There are reports that you have paused this stake sale. So would you like to comment on that? And what is the future, sir, in this? I mentioned that maybe you didn't hear. I said I also
read the same, I lost you.
I also read the same thing that you all read. So I don't know where that emerged from. But notwithstanding all that, here again, the company had filed a DRHP last year and was exploring a cap raise, but the markets were not that friendly at that point in time. So that elapsed. The company is in the verge of reconsidering their options of raising capital this year. They're performing well. And we as a bank hold right now 74% of the company. We will continue to be a majority shareholder.
Okay, so any timeline on when the IPO can be announced?
That I think best the board of the company tells you when they're ready. Okay. I can't comment just now.
Okay, fine. Thank you.
Thank you, sir. Thank you, Siddhi. Next in line is Falak. Falaknas, you can ask your question.
Yeah, my question is to Ms. Shalini. When you were answering Saloni's question on regulations, you mentioned something is expected on saving accounts from the RBI. Could you please elaborate what is expected?
No, so Falak, let me clarify. What I was saying is last year, credit cards was covered, credit and debit cards under co-brands in April. Digital lending was thereafter covered in September. So from a product category standpoint, the one that still needs probably needs to be reviewed and come out with some clarifications or guidelines is savings account. So RBI is potentially looking at this. There are no time frames for it. That was what I was saying. So there are three main product categories: cards, personal loans, and liability accounts like savings current. Cards is done, personal loans is done. So now this one is left. That was what I was saying, Falak. Yeah.
I see. Thank you.
Welcome.
Thank you, ma'am. Thank you, Falak. One more question we have on the chat box is from Mr. Anil Kumar Sharma from Dhanam. He's mentioned that heard that Federal Bank will raise rupees 4,000 crore capex this year. What will this amount be spent for?
No, I did mention that we have a shareholder approval to go up to 4,000 crores. The entire thing is for growth of the bank. The bank has been growing, as you would have noticed, almost 20% a year on year. If you're a good bank growing at 20%, then you're consuming capital. Therefore, you need incremental capital to fund the next phase of our growth. We are at 4 lakh crore or so of business. We believe the bank at this current course and speed over the next 3 years should be closer to 6 lakh crores or better. And to feed that growth, we need capital. So that's why we'll raise capital.
Thank you, sir. Roshan, would you like to go next?
Yeah, thank you. And hi, sir. Federal Bank is one of the pioneers in NRI business. But you have only representative offices right now. Do you have any plans to open full-fledged bank in Dubai?
Roshan, as you know, the regulations don't permit easily for an Indian bank to set up a branch overseas. And we have no particular interest in doing banking in those countries to serve the local communities there. That's not our skill. Our skill is to be a bank for Indians wherever they are, to meet their needs in India. So two points are important for us. We want to bank Indians wherever they are for their needs in India. So we don't visualize setting up branches. We certainly visualize setting up more geographies, if permitted, where we can have offices to do client servicing and client origination for their requirements in India.
Okay, thank you, sir.
Thank you, Roshan. Anybody else would like to go next?
I guess they're already done.
Sir, this is Ashish here from PTI. Am I audible?
Yes, Ashish.
So, sorry, a clarification of a clarification actually. So, on FINA, you said that the company is reconsidering its options after the DRHP lapsed last year due to choppy market conditions, and then you also said that the bank will continue to hold majority stake in the company. Right now it is at 74%.
Yeah.
Yeah. Okay, sir. Thank you so much.
Yeah. Anything else, Devashri?
I don't see any other questions. If there is any more question, then we would like to take. Otherwise, okay, sir. We don't see any more question. Then we can close it.
Is there all the questions in the chat were answered?
Yes, sir.
Okay. Thank you, everybody. Good luck.
Thank you, sir. Thank you, everyone, for joining us today.
Thank you. Bye, everybody. Thank you.
Thank you.